Hi, it's Karla Dennis, and we want to talk about the money, pricing. How do we determine pricing? Here's what we're going to cover: how we think about pricing tax preparation services, pricing planning services, and providing ongoing maintenance to the client. I think it's important that you understand what you're providing the client when you offer the client a service. How do we view pricing and why is this important? Well, it's important because it determines how much money you're going to make. And you're in business to make money, to be profitable. Yes, you're going to deliver a great service, but at the end of the day, we're not doing this to better our health. We're doing this to better our wealth. The way that I view pricing is you got to decide whether you're going to be offering hourly versus fixed pricing for your services. We believe you should have an hourly rate and a fixed rate for your services. There are going to be some services that you would have to charge hourly for, although it's preferred that you go a fixed rate. You need to understand if you take upfront fees or not, or will you require full payments. When it comes to tax planning, I recommend charging between 30 to 35% of the savings you believe you can save the client. Let's talk about the tax preparation pricing and how to help you determine that pricing. And I love analogies, so I am going to give you an analogy. And I think that a picture speaks 1,000 words. On this screen, you see different types of retail stores. We have Walmart, we have Kohl's, we have Macy's, we have Nordstrom's, we have Neiman's Marcus. If you are at all familiar with these retail outlets, you know instantly which one you're going to spend a little bit of money, which ones you're going to spend a little bit more, and which ones you're probably going to spend all the money. They've made a decision on where they're going to be in the marketplace. It's called positioning. You have to decide where you're going to be in the marketplace. And that decision is a personal decision. Decide whether you want to be Walmart, Kohl's, Macy's, Nordstrom, or Neiman Marcus. But you got to decide, because that decision will ultimately determine your price. You will be charging for basic individual returns and business returns if you choose to do tax preparation. But you got to establish your pricing and how your services will work. You got to also take in consideration ongoing maintenance of that relationship. If a client pays you $200 to get their taxes done in February, does that mean you should talk to that client in August and July and November and December and not charge them nothing? Maybe. Depends on your model. I recommend charging a minimum of $600 for a basic return, and that fee can go up. Your pricing establishes your perceived value to your customers. When you charge more, you are going to deliver more value, perceived value to the customer. You can command a higher level client at the same time. Rarely do you see customers fighting inside of Nordstrom's, Neiman Marcus. But You may go inside Walmart and anything is subject to happen. You decide where you want to be in the marketplace. And yes, I go to Walmart and I enjoy shopping there too. Business tax preparation pricing. How will you price your business returns? When it comes to a business return, you should not charge below $1,200 for a return. You are positioning yourself as a trusted advisor. You don't need to bring on 1,000,000 clients. You need to bring on the right clients. And you want to bring on clients that value you. The clients will value your knowledge and value your expertise when you engage them at the right fee. That will never change. We don't take on every single client. Remember that. Your business model is not for everybody. Everybody doesn't drive a Lamborghini. Everybody doesn't drive a Rolls Royce. Everybody doesn't drive a Toyota Camry. Everybody doesn't drive a Honda Civic. Everything is not for everybody. And the best thing in your business is you can pick and choose who your clients are. I like to work with clients who have the right mindset. It's not all about dollars and cents when it comes to onboarding clients. It's about good relationships. Can we get along and do we have similar philosophies? We look at clients' personalities. You might not want to deal with high demanding clients. I know I don't. I like to deal with clients that are easygoing, clients that trust me and trust I'm going to do the right thing, clients that I can equally respect. You decide what clients you choose to do business with. We work with clients that look at us as a partner, a team member on the same team, because we are partnering to help them get to where they need to go. There are other things you need to consider when you're taking on business returns. You have to look at how much bookkeeping and accounting work is involved for that client. A lot of companies don't have their accounting work in order, and they may think that tax preparation includes their tax returns. They may think that tax preparation includes doing their accounting, doing their sales tax, doing everything. When you're quoting these business returns, you need to take into account how much accounting cleanup is needed for you to do the returns. And you will charge extra for the cleanup. You will charge extra for the cleanup. Very important to take into consideration these things. Pricing of tax planning. How do we price tax planning? Well, let's talk about that. When it comes to tax planning, you have to educate the client on how it works, because there's a big distinction between tax prep and tax planning. Clients don't understand that. Remember, preparation is doing the returns, but planning is the X-ray, the MRI, literally the full body scan into the client's life, with the goal of constructing a tax reduction plan for the client to lower their tax bill. That's tax planning in a nutshell. You are going to construct a tax reduction plan for them. What most tax professionals do, tax preparers, when they're preparing tax return, they are trying to educate the client during the process. I have heard so many times, well, when I go to my tax preparer, they kind of tell me this, but they don't really go into details. They're always in a hurry. That is because their model is not set up to do tax planning. It is a separate and distinct service, and you have to educate the client. A lot of tax people are just doing the same thing they did last year, cutting and pasting. We call this the Mickey Mouse tax prep. The clients may or may not know they're getting that, but that's what's being done. You have to educate the client. Show them why you suggested certain strategies and why this makes sense for them. Educate them. Why is this the only industry that we feel like we don't have to educate the client? Educate the client and your fees will increase. How are we pricing tax planning? When you're pricing tax planning, you should be looking at garnering between 30 to 35% of the total savings of a client. You should establish a minimum fee of at least $2,100 to do planning. Your target, again, is at least 30% of the current year estimated savings, generally up to about 30 grand. You should be landing as a newbie in this industry somewhere between 3,500 to 9,500 in fees per plan. That's right, per plan. If you decide to become the tax scientist, you could garner up to 30 grand per plan. But at a minimum, that should get you where you need to go. Now, how are things based on season? How do you adjust? Your fees will pretty much stay the same, 30% to 35% of the savings, except for when it's toggle time. I like to call toggle time October, November, December, because we're getting ready to toggle over to the next year, January, February, and March. During this time, you will charge 30% to 35% of 2 years worth of savings. So if your client was going to save 10 grand and you charge 30% of that, that's about 3 grand. You would charge 6 grand for that plan. This is the only time you're going to layer multiple years of tax savings, because we literally are getting ready to turn the corner to a new year. So you will charge a percentage of both during the toggle time of the year. Other considerations. You need to think about charging for cleanup work for the client. If they don't have their books and records in order and you need to get that tax planning done, well, then you charge them to get that tax cleanup work done. You might have to turn down tax planning to get their books in order. Remember, we want to work in integrity. Let's not take on clients that we cannot service. You may get clients that are international clients, clients that go back and forth between countries, work in different countries. If you cannot serve the international client, then do not take the engagement. Always stay in your lane of expertise and offer the client what you can truly do. I will teach you the basics of tax planning. You will walk away with the process. Stick to it unless you choose to become the tax scientist and add on. Pricing of implementation. Remember, we said tax preparation is one service, tax planning is service number 2, and tax implementation is another service offering. Let me tell you about the methodology of implementation. During the planning process, you are putting together a plan of strategies for the client, but you're not implementing any of them. You are the general practitioner and you are writing the prescription. You, as a service provider, could actually become the surgeon. You could fulfill the prescription and become the pharmacist if you choose to. It's up to you. It depends on your background. You would charge the client an hourly minimum rate to implement the service, or you would charge a flat rate depending on what the service is. You could also charge the client an implementation fee to aggregate a team together of professionals. Maybe you got to get them an attorney. Maybe you got to get them a financial planner. Maybe you got to get them a bunch of different other team members. But you would charge them a fee to quarterback that team. That's your implementation fee. If you decided you didn't want to have anything to do with implementation, you could make a relationship with another firm and you could refer them your implementation work. You could outsource your implementation work. There's a lot of ways to handle it. The key is knowing how to handle it. Let's talk about the team of implementers. You could hire employees to implement for your clients. I have an internal team that does my implementation. You could bring on a partner, such as a retirement specialist, a financial planner, an attorney, a realtor, someone who sets up businesses. You could refer to another firm. You want to make relationships. Very important that you make relationships with people. But you are going to need to decide how to handle it. Now, I want to give you some sage advice from my trusted point of view. You want to maintain the relationship with the client. I am the quarterback. I am the ultimate trusted advisor, and I hold the keys to whomever is going to come into my client's kingdom. I've chosen to quarterback our implementation within our firm, and I outsource to trusted advisors because you don't want the boomerang effect. Outsourcing to somebody that you know nothing about and they don't perform at the level you expect. If you have multiple partners involved, quarterback it. But regardless of what you do, be in integrity with your client and tell them what the relationship is with the person that you're going to outsource to. Either you've done business with them before, personally, or you refer them to clients with no complaints, or you don't really know them, but you know of them, and this is what they do. Integrity in this industry is extremely important. Let's talk about pricing of ongoing maintenance. This is important because clients want to have a relationship with you. And the trusted advisor model. If you know the client will want that ongoing conversation and you really want to have clients and you don't want it to just be transactional, you got to think about how you're going to charge for the ongoing maintenance. This is where the customer turns into a client and you are servicing them on their tax-related questions about their situation, about their business. And you decide how often that needs to be. When you are doing ongoing maintenance, will you want them to have 2 appointments with you a year, 4 appointments a year? I always double what the client requests. And the reason why I do that is if the client has an appointment with me, I probably need to have a follow-up with that client. So I want to make sure that I am pricing the follow-up appointment to answer the client's questions if I need to do any research. So 2 appointments turn into 4, 3 will turn into 6. It always happens. You need to be paid for your expertise. So you should garner another minimum of $1,200 to $1,500 a year from that client just on the ongoing maintenance. Decide where you want your hourly rate to be. You should be getting somewhere between $250 to $300 per hour. And if you feel like you're not there, at least know where you are. At least know where you are so that you can grow up to where you want to be. Let's talk about taking deposits because you're never going to start work without having a signed engagement agreement or money up front, ever. You will always take a deposit before you begin that service. A client is a client that pays. Your deposit needs to be at least 50% of the client engagement. In tax planning, I recommend you take the fee up front and then you deliver the service. You are a person of integrity and you will do the job. That is my true recommendation. Some lasting thoughts. Always start your fees off higher and you can always negotiate lower when you're in doubt. As you become an expert, you will never negotiate your fees. Your fees are your fees. But you need to grow up to that. And that's okay because there's money to be made regardless of where you are. I want you to walk away with some action steps. Establish your hourly rate and your minimum rate for business and individual taxes. We already know how you're going to charge for planning, but your hourly rate and what your minimum rates need to be for individual and business returns, you need to decide. So when clients call and ask how much you charge, you can say, my minimum rate is X.